Hello, welcome to Part 2, Backtesting Multiple Criteria. I'm Patrick Grattan of Revere Trading. In Part 1, I explained how to perform a simple backtest using a single criterion. However, a strategy with any level of sophistication will have multiple rules for when to buy and sell. In this video, I'll show you how to do that in the Revere spreadsheets. Let's get started. This is the setup page that you are familiar with. In this case, I have already set it up a little bit here. The daily is selected. 2,500 days will be simulated. Signal issuance, I have chosen at market open. So after market close is more convenient because you have all evening to place the trade. But the benefit of choosing at market open means that you have the ability to use the most current stock price when you are making your strategy determination about what signal to issue. Symbol is SPY as before, S&P 500. And I've already populated here criterion A, B, C, and D. Criterion A is the close from the most recent close, less than the close from 2 days ago. I've got the open, and again I'm using 0 here. This means I can use the most recent price that's at the opening bell. I can use that data, and I'm comparing it to the close from the day before. I'm using the open from the day before and closing it, comparing it to the close from the day before. So that's the direction of the market on the last day. And I'm comparing the morning open bell compared to the open the previous day. So you can see that I've just got several different parameters here. They're all set up to be the most recent price history, just to see if the previous day's market movement has any indication or bearing on what's going to happen the next day. So just some real basic things. You can put any numbers in here you want. The main point, though, is when we have multiple criteria like this, A, B, C, and D, we may not know which one is best. In fact, just looking at this, it's really hard to tell which one was best. And not only that, it's really difficult to tell how to combine them so that you get the best performance possible. When we talked in the previous one, the backtest, basic backtest software, you have to fill out these decision 1, 2, 3, 4, 5, 6, and you got to know exactly how to fill them out in order to be able to come up with a strategy. And that can be really hard to do. So in this case, if you've downloaded the most recent spreadsheet, the development table spreadsheet, so you can't use the basic backtest one, but download the development table spreadsheet as indicated in the book, you'll get this extra button here, Simulate Above Criteria. And when we click on that, what it will do is it will take all of these 4 criterion and try combining them in different ways to see if it can come up with the best strategy possible. So I've already run the software, so I don't need to click it again now. But I'll show you what happens when you click it is it populates this development table. This is a new tab that's added just for this spreadsheet. In this tab, you have table A, B, C, and D, and these correspond to the criterion A, B, C, and D. So in table A, we are just only evaluating criteria A, and you'll notice that we have decisions 1, 2, 3, 4, 5, and 6 here. These are the same as the ones that we assigned in the previous videos. In this case, though, pattern 1 assigns it A to the cash to long, and not A from long to cash, and then false for the other decisions. And then you can see it inverts it for pattern 2. And then it continues like that. It tries different assignments, 3, 4, 5, 6, all the way through 10, different assignments, try to come up with the best strategy. And then down here we have the score at the bottom. Now on the Setup tab, we have Sort Results By, and we selected the Revere Trading rating. You could select any of these other ones, and that's what the score would be. But in this case, the Revere Trading rating was selected, so therefore that's what these numbers indicate. These are the rating that each pattern got. So you can see it sums it up here that 3.4 was the best, which was pattern number 1. Sure enough, you see right here, pattern number 1, 3.4. This was the best one of those 10. And then for table B, it does the same thing. It found that 20 right here was the best with 7.7, score of 7.7. C, number 30 was the best right here, score of 7.9. And for criterion D, 31 was the best, which is down here, with a score of 6.7. So that's fine. We see for each of the individual criterion, we see the best way it could come up with for combining those criterion, or I should say assigning those criterion to be able to come up with the best strategy. But now how do you actually combine them? Well, it actually does that for you as well. You can see in the first table here, we've got criterions A, B, C, and D, and we've combined them in multiple ways. So this one is A and B, this one's A or B, A and C, A or C, and so on like that. And when it uses A, it's using number 1, pattern number 1, which was from up here. It was the best one, pattern number 1. And then for B, it's using pattern number 20, which, as you recall, 20 was the best one here. So you see, it doesn't combine all the different possible assignments, only the best. Whatever from each one of these tables, whichever one was the best, it's going to try to combine those. And so you see, previously our best score from the individual criterion was number 30 with a score of 7.9. But when we combine pattern 20 and pattern 30 together, we get a new pattern, number 47, which is 9.7 score. So we've made an improvement here by combining criterion B and C together. Let's see if we can do even better than that. Here's where we're combining 3 criterion at a time. You can see pattern 71 has an even better score of 10.3. And then the last table here is when it combines all 4 criteria together, and pattern 86 is 11.2. So once again, what is 86? 86 is taking the best pattern from A and combining it with an OR statement for the best pattern of B, and then combining that with an AND statement for C and an AND statement for D. So to say it another way, we have pattern 1 or pattern 20 and pattern 30 and pattern 31. If that sounds confusing, you don't have to worry about it at all. It's all doing this behind the scenes. This is just to give you an idea of what's happening. All you really need to know is that the best pattern was 86 because it gives you the highest score, 11.2. And taking this pattern number 86, we can pop back over to the Setup tab, drop down here, and type it directly in here, 86. Simulates it, and there we go. In the blue, we can see the results of this strategy, and you can see it does very well. It follows the buy and hold red right up to this point here. We break out a little bit lower than the buy and hold, but really the real benefit here is when it crashed in 2008, you see that our current strategy continued all the way up. It looks really good. If we go to compounded return graph, you can see it looks really, really good because we've reinvested all of our profits here. So again, we can go to the results output. We can see the output from this strategy from the individual days, when it bought and when it sold. And we can see the reviewer trading rating is 11 here. We have a 14% annual return, much better than the 7.2% annualized return for buy and hold. And 74% of our trades are good trades, and 48% of the time we are invested. Half the time we're invested, half the time we're in cash, so that mitigates a lot of our risk. So that's it for this video. In the next one, I'm going to show you how to consolidate your criteria to make room for more criteria for an ever-evolving strategy.